Let's start off with Kathleen. When you take a look at the latest Fed speak, or as Garfield puts it, Fed here, what's the key takeaway?
Well, that the Federal Reserve is repeating its message over and over and over again. It is going to raise rates, and it's probably going to keep them there for a while. Mary Daly, president of the San Francisco Fed, Raphael Bostic, president of the Atlanta Fed, both speaking today. And not only that, not only keeping rates high, but on the other hand, opening the door possibly to a 25 basis point hike instead of 50 at its decision on February 1st. Let's listen to what Mary Daly said.
Starting point is the SEP, putting it between 5.25 and 5.5 if memory serves. That's a reasonable place to start, but we're going to need to go in and imagine as the data roll in, do we need to go higher or can we stop a little earlier? I think something above 5 is absolutely, in my judgment, going to be likely. But when I say absolutely going to be likely, I still have uncertainty bands around that, but that's where I'm putting it right now.
And though she didn't say it in that long paragraph, Mary Daly also did say that she saw the possibility of 25 basis points. Raphael Bostic saying that it would probably hinge on the CPI. If you get maybe a weaker than expected CPI, that would maybe increase the argument for the 25, but he says 25 and 50 both on the table. And CPI, of course, expected to come down a good bit year over year when we get those numbers just a couple of days from now. And the month before, they came in lower than expected. It was a big positive surprise for the markets. I think it's interesting what Raphael Bostic said about keeping rates high. He says, I'm not a pivot guy. He said the Fed should pause and then hold. He was asked to define, well, what do you mean by hold? How long? And he said, 3 words, a long time. And I think that's the message the Fed is trying to pound in, because it's not just about inflation starting to come down, coming down sustainably. That's the other part of the puzzle there. Mary Daly, in fact, said recently that she could see a starting point, a reasonable starting point for how long you might keep the funds rate above 5%. She said maybe 11 months. So you see, it's right now, that's what the Fed's looking at. There's going to take a lot more improvement in CPI, it looks like, for them to actually start considering bringing things down quicker. But maybe markets should be happy if they stop at 5.1%.
And Kathleen, of course, that's important. The CPI are inflation expectations, right? Where people see inflation going from here. Do we have any more clues on where we're at?
Well, the latest numbers from the New York Fed, theirs is one of the newer surveys, but very closely watched now. And what you see on this chart we're going to show you right now is 2.99 over the next year. That's the expectation. It's down from 4.2 back in October. So that's a nice change, isn't it? But it's the other line. It's the 3-year expectations. That is, if you can see from this chart, it's so much higher than where it was. It has come down a good bit. But this is a concern for the Fed. The longer-term expectations, short-term expectations tend to correlate, fluctuate with what's happening to inflation right now. That's the number they want to see. It got as high as nearly 7%. It's back down to 4.99. Both of them before the pandemic were at 3%. And I just want to add, I'm in Chicago to do something that I think we're going to talk a lot about inflation. The University of Chicago annual economic outlook, the Booth School, the business school puts this on. Raghu Rajan, former head of the Reserve Bank of India, former chief economist at the International Monetary Fund. Randy Krosner, who of course was a Federal Reserve Board governor. And Winston Du, who is a financial research advisor to the New York Fed. A new face on the panel this year. 12 o'clock Central Time. You can go to their website and watch it online.